Straight then to the top story this evening, and in a breather for the startup community, the government has eased the angel tax norms. Now, the centre has released a series of measures aimed at making life easier for budding businesses. Now, first and foremost, the most important, funding in startups by all investors will be exempt from angel tax up to an aggregate limit of 25 crore rupees. Till now, remember, the exemption cap stood at about 10 crore rupees. Second, the government has widened the definition of startups. Now, an entity will be considered a startup for up to 10 years from the date of incorporation. This is against the previous existing period of 7 years. Now, also an entity will be considered a startup if its turnover in any financial year has not exceeded 100 crore rupees. Currently, this cap, remember, stands at about 25 crore rupees. Fourth, investments into eligible startups by listed companies with a net worth of 100 crore rupees shall be exempt from angel tax beyond the limit of 25 crore rupees. Similarly, investment by non-resident Indians and alternate investment funds shall also be exempt beyond the limit of 25 crores. However, one concern remains unanswered. The government has not made any announcement on the contentious issue of Section 68 of the Income Tax Act. Now, this deals with unexplained fund receipts.
A startup shall be eligible for exemption under Section 56(2), that is Roman 7B, of income tax if it is private limited company recognized by DPIT and not investing in any of the assets as per the notification. The assets are, that means they are not investing into this. Building or land or building or both, not being a residential house, loans and advances. Like you cannot take capital and put loans and advances. You cannot take capital and make land and building. That is not a startup because then it's a real estate business. So therefore, barring those and capital contribution made to another entity. Startup shall file a duly signed declaration with the Ministry DPIT for availing exemption. Because this is something which will ensure that we have legitimate entities which will getting it. The declaration shall be transmitted by DPIT to CBDT, the Central Board of Direct Taxes.
I think very, very clearly this notification and the actions taken and the effort taken is in the direction to enable startups and enable domestic monies getting into startups so that they can grow. And this to me is a big unleashing of the shackles that were being bound by Section 56. I think the angels were being angel tax is moved from being a demon tax to a little bit more angelic with this.
All this new notification is asking for is a mere simple self-declaration on behalf of the startups. And with the new age of definition of startups moving from 7 years to 10 years and 25 crore turnover to 100 crore turnover, I think many startups will start getting registered on that. I'm sure there will be 1 out of 10 maybe startups which are not aware of that, but I presume through the various arms of DIPP, Invest India and the various state governments, they'll be able to reach out to all the stakeholders.
Keeping it with the entrepreneurial ecosystem then, few months after sealing the $16 billion deal with Walmart, Flipkart's co-founder Sachin Bansal has invested 650 crore rupees into the ride-hailing app Ola. Now remember, this is the largest investment by any individual into the company. Let's bring in Mugdha Warrior, who's joining us with details. Mugdha, what exactly are you picking up about what prompted Bansal to make this investment?
Yes, you're right. Sachin Bansal has made a massive investment of rupees 650 crore in Ola, and this will be the largest investment by an individual in Ola till date. And remember, Sachin Bansal had walked away with nearly $1 billion last year when he sold his stake in Flipkart after it was bought over by Walmart. And, he's said to be looking at several investments and has also set up a separate holding company through which he wants to make investments. But even during his Flipkart days, Sachin Bansal has been an active investor. And, some of his notable investments were in electric vehicle startup Ather Energy and medical tech company Sigtuple. And Ola, on the other hand, has been steadily raising capital, ramping its valuation up to $6 billion. And it has itself been, making increasing acquisitions and investments such as Foodpanda and Riddler in the public transportation space last year. And recently, its investment in bike sharing app Vogo.
Let's throw the spotlight on Dalal Street, where it was another day, another sell-off. It was the 8th straight day of losses for the benchmark indices on Dalal Street. Now, the Nifty and the Sensex ended the day over 0.25% lower, with the Nifty at the 10,600 mark and the Sensex below the 35,500. Now, the midday rally got completely sold into, with the bears gaining momentum in the last 30 minutes of today's trading session. Now, the broader markets fared slightly better. The Nifty Bank ended the day flat with a slight positive bias, while the mid-caps saw a mild outperformance. Now, back in New Delhi, several state governments are still struggling to reduce the losses faced by their power distribution companies. Under the Uday scheme, states were, remember, supposed to reduce the losses to 15% in this financial year. But data for the first 9 months of FY19 show that the task is cut out for many states. Anshu Sharma is joining us here with the latest development. Anshu, what exactly are you picking up across the states?
Well, that's right. The states participating under the Uday schemes have a target of reducing losses on account of power supply to 15%. Now, if you see the 9 months data as per Uday portal shows that all India AT&C losses are at 21.22%. Some of the states have been performing way off their targets under Uday, like Uttar Pradesh has losses of AT&C at 31.24% against a target of 19.35% until December 2018. Similarly, Bihar's AT&C losses are at 38.95% versus 21.16% target. And even for Jharkhand, the losses are at 36.12% against the target of 17.97%. While technical and commercial losses are still high for the usual states which have been making losses, the gap in average cost of power supply and average revenue realized for the 9 months of this financial year for all India is at 28 paise per unit. Please note that these data provided by states are not final, as DISCOMs are not obligated to audit their accounts every quarter. Hence, the final data on operational and financial indicators may change. Now, just recently, about 10 days back, in a review meeting with Power Ministry, states have told the centre that the power costs have increased and hence the states are unable to meet the targets set under Uday. Some of the main reasons for states states have cited are coal shortage, an increase in employee cost on account of 7th pay commission implementation, and also reduction in bill collection from rural areas where power supply has increased under Saubhagya scheme. Not only this, about 58 DISCOMs owe over 40,000 crore rupees as outstanding due as of November 2018. As per the Prapti portal, DISCOMs owe 16,000 crore rupees alone to NTPC and about 7,300 crore rupees to Adani Power. Sources say that Power Ministry has told states that it cannot be business as usual for the DISCOMs, as cash gap is a threat to continuous and reliable power supply. Back to you.
Let's track some key corporate developments then. In a bid to ease the debt burden, Anil Ambani's Reliance Power is likely to sell about 18 to 19% promoter stake in the company. Now, sources tell your channel that JP Morgan has been appointed as the banker for this proposed stake sale. Let's bring in Ritu Singh, who's joining us with more details on this all the way from Mumbai. Ritu, what exactly is the progress so far on this deal? And tell us who could be the potential suitors?
Well, that's right. Reliance Power has appointed JP Morgan as the banker to advise it in the promoter stake sale that the company had announced it would be looking at. Now, we understand that of the 30% direct holding that the promoters have in Reliance Power, they're looking to offload as much as 18 to 19% stake. Do remember, along with Reliance Infra, the promoters holding in Reliance Power directly and indirectly comes to over 70%. But even after this stake sale, the promoters are hopeful that they will be able to maintain at least 51% control of Reliance Power. Now, who are the likely contenders? There's the likes of Qatar Investment Authority, ADIA, Blackstone, KKR, TPG that may show interest in acquiring stake of the promoters. This, once concluded, will help the company pay some of its debt, which, remember, it had come to a standstill arrangement with some of the lenders, with the majority of the lenders, where they'd agreed to not sell the pledged shares in return for the Anil Ambani Group companies servicing their interest and debt repayments.
Ritu, do stay with us because we hear there's also a twist in the JP Infratech debt resolution. Now, promoters of the company have made a last attempt to actually save the company from going under insolvency. Banking sources tell us that JP Associates have actually made a settlement offer to financial creditors as well as home buyers. What exactly are you picking up on this particular front, Ritu?
In a move that is very similar to what the Ruyas tried to pull off with SR Steel, we're given to understand now that the promoters of JP Infratech are looking to withdraw the company from insolvency proceedings under Section 12A of the IBC by offering to repay the creditors close to the full amount that is owed to them. We're given to understand that the promoters, that is JP Associates, have presented this offer to the creditors where they've offered 1,500 crore rupees as upfront payment to the IDBI-led consortium. In addition, they've also offered another 4,858 crore rupees as debt asset swap to the lenders for the land that is sitting with JP Infratech, and another 2,000 crore rupees as optionally convertible debentures, but they have sought complete waiver on repayment of 1,425 crore rupees that is owed as interest payment to the IDBI-led consortium. In addition to this offer to the financial creditors, what they've offered to the home buyers is a 50% waiver on the stamp duty, free maintenance charges for 1 year, and 2,000 shares each to all the home buyers of JP Infratech. Now, it remains to be seen whether or not the lenders will pay heed to such an offer, which they've not done in the past when it was the case of Ruyas. Do remember, NBCC, as we had reported, is leading the race to acquire JP Infratech, where NBCC has offered about 1,000 crore rupees as upfront payment to the lenders compared to 10 crore rupees that has been offered by Suraksha Group. In addition, NBCC has also offered 3,000 crore rupees as debt asset swap compared to 5,000 crore rupees offered by Suraksha Group, and NBCC has offered to raise a fresh debt of 2,000 crore rupees, out of which 1,000 crores will be used to finish the construction of the project, and another 1,000 crore rupees to repay the financial creditors of JP Infratech. The time taken by both also varies, so all of these details will now have to be studied by the lenders before they finally get to voting who the highest bidder will be.
Ritu, appreciate you bringing us details on both those crucial developments. But from one story on stake sale to another, Emami's stock shot up and closed 13% in the green today. This after the company's promoters divested 10% of their stake for a sum of 6,200 crore rupees. Post the sale, the promoter stake has fallen down to about 62.4%. Now, companies such as SBI Mutual Fund, Premji Invest, IDFC are the buyers. Emami's management said that stake sale will lease promoter group's liquidity position and also reduce the debt on the company. Day 2 at the International Court of Justice in the Kulbhushan Jadhav case, and Pakistan has started putting its arguments before the court. Just yesterday, India presented its arguments, remember, and said that Pakistan had put an innocent person's life at risk. The CJI had then restrained Pakistan from executing Jadhav until this case was further heard. And down south in Bengaluru, a pilot was killed and 2 others ejected to safety when 2 aircraft of Indian Air Force's Surya Kiran aerobatic team crashed in Bengaluru today. The crash happened during the rehearsal for the 2019 Aero India show. The air show is scheduled to open tomorrow. And towards a key political development, the AIADMK has joined hands with the BJP and the PMK to forge a mega alliance in Tamil Nadu. Under the pact which has been finalized today, the AIADMK will contest from 25 seats, the BJP will fight from 8 constituencies, and the PMK will get 7 seats for the Lok Sabha battle. Let's also revisit our top story where the government eased the angel tax norms. Now, the centre has released a series of measures aimed at making life easier for budding businesses. My colleague Rituparna Bhuyan caught up with the CBDT member, Akhilesh Ranjan, to seek more clarification on this particular notice. Let's listen in.
Section 68, I think as the Secretary DIP also mentioned, it's in provision on the Act for the last 50 years, 60 years. Now, that section is not peculiar to startups. It has nothing to do with startups really. It has to do with every taxpayer, every SSE, who claims to have received some money as an unsecured loan or as equity investment or whatever, and that person is then called upon under the law to provide some clarification as to who is given the money. Is that person, does he have the capacity to give that money? The creditworthiness of that person, and to show that the transaction is genuine. Because you will understand and appreciate that this is a very fine way of putting your own unaccounted money back into the business. So obviously the law requires the company or the taxpayer to explain from where he got the money and who was this person and whether that person had the capacity to do it.
Right. So Section 68 exemption per se is not possible given
it can't be possible because it affects all taxpayers, not just startup companies. It affects individuals, firms, other companies. It affects the largest companies of the country.
You said that, as far as, activity in the ordinary course of business is concerned, that can be carried out, right? If you can explain that, because, for example, if I have a jewelry business, if I have a business of money and lending, can I then get exemptions listed in this?
Yes. So if you read the notification, one of the banned categories is loans and advances, because we find that in many cases, unaccounted funds are laundered through company after company by way of loans or advances. But then there are some starters we know who are in the business of lending money. They would have credit agencies or credit companies. And so we have said in the notification, if the lending of or loans or advances are in the ordinary course of money lending business, then you can go ahead. That's not a banned activity. Right.
On that note, we're completely timed out on this edition of Reporter's Diary, but keep it with CNBC TV 18 as Money, Money, Money is up next. Goodbye and thanks for watching.